This asset class is considered to be very risky, right? From the investment perspective, even taking the risk to build in this space and commit yourself to building in this space full time was originally perceived as high risk. Maybe the industry is changing, it's becoming more legitimized from the, mainstream perspective, but I would just relate these two in that for me, jiu-jitsu, the more I trained, the more I knew about myself and about my skills, the more I was comfortable taking on this risk. And I think that this is completely correlated or rather completely related to crypto itself, right? If somebody doesn't know anything about, let's say, just investing in the space, they'll perceive it as entirely risky. And the more you know, the more comfortable you are taking on that risk. In any side, in like I suggest, in joining the crypto industry full time, originally it's a risk that now seems like it would otherwise have been a risk not to do that, right? So I would find it almost more risky to not be involved in crypto right now than it is to actually be involved.
Welcome back to the podcast. Today we have the pleasure to talk to Dillon about DIA, the Oracle. And I had the pleasure to meet you at Token. We had a long conversation, and I'm so glad to have you on the podcast now.
Yeah, thank you. It's great to be back. I'm a recurring guest now, apparently, officially.
Yeah, absolutely, man. I remember we were just talking about Brazilian Jiu-Jitsu and your journey within sports, and that ecosystem. So could you just tell me a bit more about the skills that you obtain during your experience as a Brazilian Jiu-Jitsu athlete and how they're helping you within your current role as the head of BD at DIA?
Absolutely. Yeah. So I was very big into Brazilian Jiu-Jitsu when I was younger. I still train a bit these days, but not as actively as I did when I was younger. I used to compete and train multiple times a week. It was a really great sport and skill set to acquire at a young age, and I would definitely encourage a lot of young children to do this and to pick up Brazilian Jiu-Jitsu or any type of sort of martial arts. I think it adds a lot of confidence to somebody who's young. And I think that's very important when you're young to build this set of self-trust, self-confidence. So it was a very great experience for me fighting through the fear of putting myself out there to compete, taking the risk to actually go out on the mat and with an undetermined outcome and see what I can do based on the skills I've trained. So it was really good. And as it relates to crypto, I find that it's these things are pretty similar, right? In crypto, I find that this asset class is considered to be very risky, right? From the investment perspective, even taking the risk to build in this space and commit yourself to building in this space full time was originally perceived as high risk. These days, maybe the industry is changing, it's becoming more legitimized from the mainstream perspective. But I would just relate these two in that for me, jiu-jitsu, the more I trained, the more I knew about myself and about my skills, the more I was comfortable taking on this risk. And I think that this is completely correlated or rather completely related to crypto itself, right? If somebody doesn't know anything about let's say, just investing in the space, they'll perceive it as entirely risky. And the more you know, the more comfortable you are taking on that risk. And so in any side, in like I suggest, in joining the crypto industry full time, originally it's a risk that now seems like it would otherwise have been a risk not to do that, right? So I would find it almost more risky to not be involved in crypto right now than it is to actually be involved. So yeah, I think it was just a great skill set. And the more one trains, the more one teaches themselves and learns, the more comfortable they are putting themselves out there, taking risk and achieving better outcomes, extraordinary things.
Absolutely agree with you. And what was your favorite submission? Because I did a bit of Brazilian Jiu-Jitsu myself, and I did a bit of MMA, just different martial arts throughout my life. But at the gym that I used to go to, we always say that your favorite submission says a lot about you and your personality. So I would love to know yours.
Sounds basic and maybe even weird for those who aren't familiar with Brazilian Jiu-Jitsu, but the rear naked choke, right? One where you're getting somebody's backs, you're getting the hooks in, and you get the choke sealed in there. It's probably one of the more basic finishes. but it's one of my favorites because once it's locked in, there's not much getting out of it, right? And it was always my go-to. So I'd say the rear naked. How about you though? What's yours?
Oh,
You
that's
might
a good question.
you probably even have more experience than I do if you're still training these days. So
Nah.
I'd love to hear your thoughts on this.
Oh yeah. I used to do a lot of wrestling, so I would say like Americana on top. That would be like one of my favorite submissions. But I would normally like go try to dominate, just get into dominant positions, stay on mount, make sure that they get really tired, pull off pressure. And then from there it just depends. I would just sometimes stay there for like comfortable like 5 minutes and then finish it towards the end. But
Yeah.
yeah, it's like from there I would transition to like side control and like finish with Kimura, but something to
Yep.
do with the arm, that's a very, I don't know why, because it's a very
No, I
quick,
like
I
that.
managed to do it extremely quickly and people wouldn't expect it. Especially when they're tired, they'll start pushing you. And then once they start pushing you, then I'll just lock it. But before we geek out on Brazilian Jiu-Jitsu, which is like a favorite topic of ours, tell me a bit more about your journey into crypto and especially into DIA and what you guys do.
Yeah, absolutely. So DIA itself is a cross-chain oracle. For those who are listening for the first time, might be unfamiliar with what an oracle's role is within the crypto space. I'll just jump into a high-level overview. So the oracle is just essentially this external, to put it simply, component, right, that delivers external information onto blockchains or applications on top of blockchains, right? dApps. Originally, the oracle's use case was to bridge the gap between the Web 2 world, any information that exists in our everyday lives, and what happens on chain, right? Because without this oracle, this intermediary of information, these two are isolated and can't really exchange information. And now that we've gone into this industry, as the industry's evolved, we're in this cross-chain, some call it multi-chain, to each their own, but we're in this industry with multiple different chains that exist right throughout the entire industry. And the oracle's use case has evolved now alongside that to also support the exchange of information in between blockchains. So at DIA, we're a cross-chain oracle, and historically, our positioning has been focused towards this specifically, exchanging and delivering data and information between blockchains. So what type of data this entails? For us, the majority of the use case and demand for this data is still traditional token asset pricing. So the price of, let's say, Bitcoin, Ethereum, USDC, all the way down. And so at DIA, kind of how we compare and contrast, and then jump in here because I don't want to go on too long here, but just to keep it a high level, we specialize in the delivery of customizable data feeds and supporting more assets than any other oracle. So the way that we distinguish ourselves relates to, of course, the architecture, as any crypto product is based. It really relates to the architecture, and the way that DIA is primarily different as relates to the architecture is that we source data different from other oracles, whereas most oracles source their data from off-chain third-party data providers. DIA goes directly to the source, so we source data directly from the decentralized exchanges, the DEXs, and the centralized exchanges on which these assets are actually trading. So by doing this first-party data sourcing approach, it allows us to implement an improved level of transparency throughout the whole value stack. Our partners and users know exactly where data is coming from, starting on the source level into the validation of the data feeds, into the distribution across different chains. It also, as I mentioned, enables superior customization because the data that we're actually taking in from these exchanges is very granular trade level data. So every single tick of a trade is granular data that allows us to employ customizable price methodologies, customizable update frequencies, and so on and so forth. And then the last thing, as I mentioned, and I'll finish up here, just at the high level DIA background, is that we're supporting and continue to strive to support more assets than any other oracle. Because of course, a lot of the exciting assets in this space are still, and I believe will continue to be traded on these DEXs, these decentralized exchanges, right? Whether it's LSTs, LRTs, memes, stablecoins, whether whether we launch just a crypto bro token and it goes and trades on, let's say, Uniswap and Camelot on Arbitrum, right? Since we're at DIA scraping these decentralized exchanges directly as a first-party data source, it allows us to have a much more comprehensive coverage of these assets that are trading throughout the industry. So let me stop there. My long-winded background is over. We can dive in a little bit deeper.
No, absolutely fine. Before we do that, I guess I just want to take a step back and talk about the Oracle problem that you essentially touched upon, where data that's on-chain doesn't directly communicate with data that's off-chain. And that's one of the primary use cases for oracles, to connect this on and off-chain information. And I was listening to one of your interviews, and you made a really good point that oracles are perceived as this trustless third party. But I just want to ask to talk about this philosophical point around oracles and how they're this third party that we need to trust. But can you touch a bit upon about why we should trust them, and how can we ensure that they don't go rogue? Because at the end of the day, when we talk about transactions and the prices that they provide, if someone managed to essentially hack one of those oracles, then it'll have a significant issue on the prices. They can manipulate the prices and benefit from it. So it's like a very interesting topic that I actually talked about with someone at Token 2049, and I was like, whoa, that's like eye-opening for me, because just that how do we ensure that they don't go, that they don't get hacked, but also they don't get rogue?
Yeah, I would actually push back against this entirely and say and maybe this is what you were referring to, but I believe that oracles should not be trusted third parties, that they should be trustless third parties. And that's entirely what we're at DIA, what we're doing in introducing the new Lumina architecture that we've recently announced and is going live in maybe we can get into dates later on here, but that we're bringing live actively, right? And so at DIA, we've launched this entirely upgraded architecture to transition DIA from this trusted third-party data source to trustless. What this means to me is obviously no trust assumptions, but on a more deeper technical level, what I think is really allowed for us to advance here is the advent of ZK technology. So within oracles, right, what we're looking into, what's evolving here is we've always been able to reach this sort of decentralized consensus amongst price feeds with different validators on a given chain or on chain, which is a decentralized crypto economic security. But within the scope of ZK proofs, we can now implement ZK proofs on chain so that you have on-chain attestations, on-chain trustlessness, that one won't actually use or ingest and access a price feed unless there's a proof provided that it has not been tampered, has not been manipulated. And so in addition to crypto economic security, we're also implementing cryptographic security, right? That's mathematically proven on the proof level. And so for us, so happy to dive into this a little further as well, of course. But for us, I think the whole crypto narrative, and one which we're seeing across the industry, and one which I embrace for all teams, is getting away from trusted third party and getting towards trustless. Because as you suggested so correctly, an oracle can be a vulnerability point in any protocol. If you're building a protocol that needs a reliance on an external price point and has a single point of truth for that price point, you want to have some sort of on-chain proofs that nothing has been tampered with, nothing's been manipulated. And so that's really what we're excited to, one of the components we're very excited about with Lumina.
Yeah, and I guess I would like you to double down on the idea that actually some oracle providers rely on a set of pre-approved data sources or a network of carefully selected data providers. And that's the attack that people would normally have on Chainlink, that all the data providers were approved by Chainlink, and they might not have a very diverse set of providers. So I'd love to hear more about your thoughts on it, but also how are you dealing with that problem at DIA? Because I know that you guys have a bit more of a like community-driven approach where you incorporate a comparatively large number of data, and then you aggregate it to one data feed.
Yeah, absolutely. So, I never like to like criticize other approaches. So what I'll do is compare and contrast, right?
Yeah.
Because I do feel like the third party data sourcing approach has its pros and its cons, right? So I'm not going to go out and say like this is entirely, yeah, there, as you suggested, Pete, there's concerns about the risk of working together of these data providers, and they could somehow work together to submit a bad feed, and how this becomes a centralized point of risk here. Um, uh, but you can also implement this, and historically, it's been a great way of reaching on-chain decentralized consensus amongst different data providers. And so there's pros and cons here. At DIA, the reason we take a different approach is because historically, this traditional architecture that I just referenced of having these off-chain data providers is it doesn't allow for a very superior level of transparency throughout the whole stack. So as I mentioned, because this data in this other model is being aggregated off-chain by these third-party data providers, by the time it's delivered on-chain, by the time the nodes of a given oracle reach consensus and then distribute that price point on-chain, and then, an application ingests it and the end user uses it, by the time that occurs, there's actually no transparency about where the data is originating on the source level. So you don't know that the data is coming from, let's say, Binance, Kraken, Uniswap, SushiSwap, Camelot, Curve, right? Aerodrome. I'm just shouting out DEXs now that I'm a fan of course, right? Shilling some bags there. So no, I'm just kidding. No, but by the time data is delivered on chain, there's no transparency about where the data is being sourced on the first party, or rather, yeah, no transparency about where data is coming from on the source level. And so this is the reason DIA was actually created with the architecture that it has, to actually solve for this particular problem and implement this superior level of transparency. So by collecting data from these first-party data sources, by going directly to those DEXs that I just mentioned and the centralized exchanges, at DIA we have a collective over 95 plus. We've added plenty since I last counted, so there's probably an understatement in that number. We have a large collection of data sources from which we're gathering this trade data on this first party data level. And so, as I mentioned, yeah, this really does help implement a superior level of transparency.
And could you elaborate on this process? I'm sorry to interrupt, but on the process of like how other oracles collect the data and how DIA does it, because I'm sure that they work with different data providers as well. But because you said you're more transparent than them and everything's on chain, could you just elaborate on that point of transparency? Because to me now sounds like, oh, they have a diverse set of data providers and you have a diverse set of data providers. So my question is, why is yours more transparent than any other?
Sure. Yeah. So let's take, for example, like the data providers that would be leveraged in the alternative architecture, which is sometimes it's like CoinGecko, sometimes Kaiko. It's just off-chain third-party data providers. We could look through the list, and then you'd have to go into each one of those and ask them where they're getting their data for each and every price point. And so by the time that this is then aggregated, pre-aggregated off-chain, and then delivered on-chain, it's very hard for the end user to actually trace the source of this data. You might know that, okay, there's a collective of maybe 16 data providers. We know these are the sources, but from where are these data providers sourcing their data? I would ask you, and this is a great question, because something I could probably even look into a little further is like where would like a Kaiko get its data? I think these data providers use different strategies for how they source their data, but at all. And, kind of the point here is that once this is brought on chain, this source of transparency is lost because it's being pre-aggregated off chain. Within our scope, within our approach here, the data sourcing is done primarily on chain. So all of the DEXs, for example, and just to get a little bit into the technicals of how we're sourcing data from the DEX side. So DEXs are, on-chain order books, and how we scrape data from DEXs is we deploy dedicated contracts, which we refer to as scrapers, which subscribe to swap events within dedicated liquidity pools. So we're actually subscribing to the to each and every individual pool on which an asset is trading, and then can actually provide our users the transparency of not just even where the data is coming from, but even down to the pool level, which pools are being included within this data feed. One historical, I guess, drawback of this is that, yes, while DEXs are done on chain, centralized exchanges have off chain order books. And so for this, we've been able to bring trade data on chain via just like a WebSocket API connection, which a lot of centralized exchanges just have as a standard where you can pull data and bring it on chain. And one of the really interesting things we're looking into with Lumina is, furthermore, again, how can we implement ZK proofs to provide a proof of this flow of data from that centralized exchange to the destination chain with an entire on-chain transparency that's proved, even relating to off-chain data. And I know I'm getting ahead here, but this is really exciting now, because if you look to where this industry is evolving, right, the demand for oracles is always growing. And as anybody probably watching this would agree, like, real world assets has become a huge narrative and opportunity for a lot of the players in the space, especially us on the oracle side. And so implementing these ZK coprocessors on chain and providing these proofs that can attestate to the sourcing of off-chain data will also further help us with our approach for real world asset data. So now anywhere that we're ideally anywhere that we're sourcing real world asset data from, we will be able to apply this ZK, approach here and provide on-chain attestation that nothing's being, of course,
And we'll
manipulated.
definitely talk more, Search and Trap. We'll definitely talk more about Lumina, and I would love to learn more about it. But I just had one final question about the data and the way it's sourced, because I think it's one of the main topics when we talk about oracles, because the way that I see them within like the stack is that they're just in between this like essential piece that collects data and provides data, and sourcing the data is so important. But I don't know whether it's technically correct, but I was just wondering whether the data that you collect from DEXs is as reliable as the data that you would collect from, let's say, bigger established players, and whether the data that you would collect from smaller DEXs might have a bigger discrepancy, like the numbers that they'll provide would have bigger gaps, and like how do you aggregate that price? And if you can just like run me through that model, it would be like super useful for me to understand.
Absolutely. So, these third-party data providers may and often likely are also considering DEX data, right? But the benefit that we have of going in and sourcing this data, even on the individual pool level, is that, as you suggested, there's large deviations of liquidity and volume within different pools. And so this allows us to even have much more comprehensive monitoring and robust actual Oracle deployments in designated down to the pool level, which pools are even included in the feed. So by being able to actually subscribe to an individual pool and decide whether that pool is included in a given price feed, it allows us to exclude pools that would have less liquidity, that would, with one significant trade, create an outlier that would affect a price feed negatively. So actually, our approach with scraping, we completely kind of embrace the idea that there is fragmentation of liquidity. There's deviation of asset prices across different chains, and by actually going into the pool level, sourcing data directly from the source, I believe that we have actually a very strong approach at mitigating some of the risks associated with these deviations by being able to have strong liquidity and volume thresholds that need to be met in order for a pool to be included, and have this robust monitoring amongst how a pool might deviate from another pool, and have these kind of like these systems in place in case one pool falls below certain liquidity threshold. We can then exclude it, right, automatically, and actually provide more robust price feeds because we're doing such sourcing directly from the data point, from the source itself.
Yeah, that's super interesting. I have so many questions about the data gathering, but I don't want to geek out on this. I want to move to the other side of this, where let's say now we've collected the data, and I know that you guys are working with 52 different blockchains. I hope I'm right. And the Oracle services that you provide are to like uh are quite comprehensive. But what I was trying to say is that it might be challenging for you to ensure that the same data integrity exists across different chains, because of the relationships that you have with them. And some chains, let's say, are faster than the others. So how do you ensure that you provide the same data feeds to every single one of the blockchains?
Yeah, as you mentioned, some chains have blocks with faster finality than others, and so what I think one of the unique things about us, as I mentioned, is this customizable factor, so that we can optimize for the different needs of different chains. We support chains with super high frequency needs that need updates, every couple ticks, every couple seconds, whereas we are, as we probably discussed this last time, but I'm super excited about, this like building on Bitcoin and the Bitcoin landscape itself. And a lot of these Bitcoin side chains and Bitcoin layer twos are still subject to like the slower block times of Bitcoin itself. And so as we're partnering with a lot of these chains, often it's not optimal to just yet push a price feed every couple seconds, or right, or as fast, and to actually align with the block time of those chains. So as I just mentioned, like, we kind of embrace the fact that there is deviation. The space is not aligned in terms of like there's standardization across all chains, or an asset might trade for the same price on Uniswap on Ethereum as it would on some layer two pool with its limited liquidity. And so I think that to assume that these are all the same could actually create some vulnerabilities and some risks. So just to kind of recap here, like, yeah, we deploy customizable oracles to meet the different needs of the blockchains themselves, and also, of course, the dApps on those chains. One of the things that we do actually uniquely is we often deploy a custom oracle for every single dApp on any of our supported chains that requests one. So if they need a custom oracle with custom price feeds and a custom methodology, this is something that we specialize in doing this very customizable approach with these teams.
Oh, wow, that's super
Yeah.
interesting. And could you just give me a couple of examples of like what dApps would need oracles, and what are some of the interesting use cases there?
Yeah, so with us, I'd say the majority of our demand on the dApp side comes from lending markets for, let's
Yeah.
say, indices or stable coins. These are types of protocols that really, and I highlight these because these really like showcase the core unique value adds that DIA offers, right? Lending markets, for example, because these are types of protocols that like to support the exciting exotic assets, the innovative ones, the ones that go beyond just like the standard top 10, top 20 blue chips. Like, we work with some very exciting lending protocols. One, for example, is Silo. It is a great partner of ours. They're doing great work on the lending borrowing side with isolated lending markets. And Silo, they're deployed on Arbitrum, Ethereum, and more recently Base. One of the areas that we've had the most strength in is on Arbitrum, because Arbitrum's done great with liquidity for all of these ecosystem native assets, and Silo is requesting these very exciting assets like these super deep Arbitrum native teams are launching, right? Like we've partnered with DopeX and provided like even our DPX feeds, which are like like a derivative of the original DopeX price feed. I'd love to go into like the long tail list here. I don't want to like misquote Plutus. There's like even Grail down to the DEX, even down to Camelot's asset. These are tokens which are natively trading, maybe not Grail. I think Grail has some centralized exchange listings, but some of these other ones are tokens which are only trading on, let's say, for example, Camelot and let's say Uniswap on Arbitrum. And since we're scraping these data feeds directly from these DEXs, DIA is the oracle that can uniquely provide support for these types of assets that are only existent within one native ecosystem on specifically like one other or two of the DEXs in that ecosystem. And why we call ourselves a cross-chain oracle, and just to kind of go full circle here, is because then we can take these price feeds and really expand the native DeFi ecosystem on a given chain, but also provide these price feeds then across the 52 or 51 other chains that we're live on. So we're really furthering the cross-chain capabilities of assets that were once very much limited and siloed in their use case because of a limit of Oracle access. I'm going off now. You've got me onto like you've got me in my bag going very deep into the weeds here. Hopefully that answers what you were wondering.
No, exactly. Yeah, no, thank you so much for providing some of the use cases. And I guess when you talk about oracles, it's such an abstract idea. And that's why I was like, oh, okay, just give me some practical use cases and examples of how projects are actually using them. But I want to move to the core values of DIA, and I know that we touched upon some of them, which like transparency and the way that you gather data, but coverage and accessibility are two other core values that you have. And I would love to learn more about them. So I would appreciate if you expand on those two.
Absolutely. So as you said, transparency, we kind of dove into the architecture was actually since inception created to introduce this transparency. What the second thing you mentioned in terms of I'm blanking on the word that you used.
Coverage.
Coverage, exactly. So that's referring to the coverage of assets, right, or the coverage of data feeds. As I mentioned, and as I've gone over here, we're getting data directly from the source, and this can be extended to outside just decentralized and centralized exchanges. Within the scope of this, as I just mentioned, we're really striving to cover more assets than any other oracle, and this is also going to relate to all types of real world assets. Like we very much want to be broad and flexible in our asset coverage, and provide teams with as many different assets as we can that would meet, this robust support criteria to have a production ready price feed that can't be easily manipulated at the source or have some vulnerabilities associated with it. And then the last thing, accessibility, is really, I think, probably the most exciting one right now for us as we look towards the launch of Lumina. This very much aligns with Lumina. Accessibility to me and to us really represents how easy it is to access DIA oracles, right? As I started, we're in this like cross-chain / multi-chain industry where we are seeing now, especially with the growth of roll-up as a service providers, we're seeing how easy it's becoming to build a roll-up or to launch a chain, right? Even no code now. You can just go into a roll-up as a service provider, click a few buttons, and within 15 minutes, deploy your own roll-up chain. And so as this industry is expanding like this, we see it as a great opportunity for DIA to expand our influence, to expand our support throughout the industry if we can make these oracles extremely accessible and very easily integrated across all of these different environments. And so for us, what this looks like is transitioning into becoming more of a permissionless oracle than permissioned. And by that, what I'm referring to is any developer being able to come in and, just as I mentioned with Rollup as a Service, click a few buttons, click which price feeds they want, what price methodologies, what update triggers, and on what chain they want it, and instantly customize and deploy their own DIA price oracle within, let's say, 5 minutes, get it live and running without needing to come to the DIA team and request it, without needing some sort of back and forth that creates, a time lag. We really want to improve the accessibility of DIA oracles for developers. And this expands also to across chains. We want to also not just come in and deploy any oracle onto a whitelisted chain, but also come in and deploy DIA oracles onto any chain, if that makes sense. So also be able to actually just come in, and obviously we'll start with like the EVMs because there's more standardization here. So you come in, you enter a couple settings like chain ID, RPC endpoints, a couple other chain ID settings, and instantly be able to integrate DIA oracles onto your rollup or onto your EVM compatible blockchain and deploy it and deploy therefore then like a customizable oracle based on that deployment. So accessibility for us is really looking forward towards permissionlessness, and how we can create this tool that is easily integrated and accessible for every builder who would need an oracle.
And another thing that I would love you to elaborate on is this idea of future-proof modularity in the core of the stack. And it's a very interesting phrase that I heard Paul using in a conversation with you, who's like one of the co-founders of DIA. And I want to understand it. I couldn't find much more on it on the internet. But I would like you to elaborate on this and simplify it to begin with.
Yeah, so as you'll now learn, we're buying very much into this roll-up thesis, right? And very much excited and strong believers that at least I can speak on behalf of myself. I believe there's thousands of roll-ups coming on chain in the coming 2 years or 3. In the coming couple of years, I think thousands of roll-ups are launching. And so with the Lumina architecture, what we've done is we are launching a rollup based on the OP stack that has a lot of modular components included in it. And so, and by modularity, what we're referring to is really, well, we will deploy on the OP stack, but I mean, theoretically, even the stack itself is adjustable in the future. But the DA layer, right? We're going to be implementing different, rather like a go-to-market DA layer. This is modular in the future. We're working now with this architecture that's not as stagnant as architectures historically were in adapting to the changes of the industry, right? As we see that there's more opportunities to scale, let's say, for example, there's a new cross-chain messaging protocol that comes on chain and is able to access instantly all EVMs and all non-EVMs. This is a component that we could theoretically integrate into the architecture to adapt to, you know, the way in which this industry, the evolution of the industry in real time. So for us, the rollup, the Lumina architecture itself is a rollup that's based on these different modular components that are future-proof in the way that they can continually be, I'd say, adapted, and we can also continually adopt new components to the architecture as well. And so it really allows us to grow and support the industry as things change. Maybe one even better example as I'm thinking through this is, as I already have mentioned, the implementation of ZK coprocessors. So far, ZK proofs are a little bit clunky in the fact that there's some additional latencies and it might incur a lot additional costs to actually, you know, it has historically been more costly to have proofs on chain. And so these ZK teams that we're chatting with and are looking into partnering with on this are, you know, actively evolving to solve these issues and to create, you know, more cost efficient, lower latency ZK proofs on chain. And so this is one instance where I can already provide some example into, in that, like, as this evolves, we're going to continue to be able to leverage the most cutting edge ZK technology and implement it into the chain. That's not to say that we're going to be completely, you know, changing the architecture at all times, but it is suggesting that there's future proof modularity that when the industry changes, we'll be able to adapt to it.
Yeah, and we keep mentioning Lumina. Actually, you keep mentioning it, and I want us to deep dive into it. But before we do, actually, when are you guys announcing it? Just a quick one, and I have a few questions about it.
So Lumina has been announced. The vision for Lumina, if you go to diadata.org/Lumina, you can find all of the information on it, and it also lays out our architecture. I find that there's a very helpful diagram of what the architecture will entail. that I usually, when I'm sharing this with people, I share my screen and take them through it because I think it's a lot easier to have the visual of it to understand it. So we've announced it. Testnet's coming live this quarter, and then mainnet. Obviously, I'll let our marketing and product team share kind of the more hard deadlines to expect here. But we're excited to launch testnet this quarter. This quarter being Q4.
And Lumina
Happy to
is
dive in as well, but yeah.
is a roll-up
Sorry.
enable. Oh, sorry to interrupt. I think it's a roll-up enable Oracle network, and it has three main components that I want us to go through. And one of them is the feeders, which essentially nodes that are collecting and verifying the data. And then you have the LaserNet, which is the L2. And then you have Spectra, which you guys define as the messaging protocol. And my understanding of it is like a bridge. So could you run me through each of those components and elaborating and explaining them in detail? I think starting with the feeders would be like a very good point, and how they're interacting with the L2 and the messaging protocol. But also, actually, sorry, just a very convoluted question. But could you explain the overarching objective before we deep dive into it? But why are you launching it? What's the underlying problem that you're aiming to solve? And then run me through the three components of it.
Yeah, absolutely. So one of the things I love most, if not the thing I love the most about
Apart
oracles.
from Brazilian Jiu-jitsu. The second
yeah, exactly. The runic joke. But second, no, I'm just kidding. One of the things I love most about oracles, and what is the most exciting part of it, is that oracles are really this integral component that relates to so many different types of applications and so many blockchains as the industry evolves, right? So as the industry evolves, the oracle has very much remained present and integral to all of these evolutions. So now we're seeing a huge demand for real world assets. As we had like the whole FTX going offline and then Binance getting kicked out, we saw a lot of perps come on chain, which now furthermore require more oracles. We're seeing that, like, as the industry is evolving, the use case and opportunities for oracles is evolving as well. And so with Lumina is our upgraded architecture to support the industry as it is now and as we see it evolving in the future. So that's our vision. The upgrades to the Lumina architecture align with our vision and furthering our approach, our vision for ultimate transparency and trustlessness. So that relates to. I'm trying to find out how I break down each component, but I'll keep it high level and then we'll dive into each. So aligns with our vision.
Before we do that, actually, I have a question about the name now. Is there any particular reason that you called it Lumina? It's like, was there any thought process? You might not know, or you might guys just came up with the name, but it's super cool. So I was just wondering whether.
So Lumina, and I would have to defer to our marketing wizard here, Mikkel, who did great with the name. So we have Lumina and we have LaserNet. So maybe I'll start. We started with LaserNet. LaserNet is the name of the layer 2 rollup itself. Lasers are, fast shooting, real time, like high frequency, things here. So with LaserNet, the idea was to really back how Dia's focus is towards like high frequency, like I need Mikkel here. He'd do much better at explaining the naming here. But lasers themselves are, high, fast, they're dangerous, it's cutting edge, and so we kind of aligned with our vision for the roll up. And then Lumina itself reflects light, so shedding light into transparency, accessibility, right? So it's like the light is reflective of our our core vision and mission to implement transparency and accessibility of DIA oracles across the whole space. Let there be light. I have, for some reason, I just had this thought in my head like last night. I was thinking of, for some reason, let there be light. And I think that's what Lumina kind of relates to here. Shedding light on where the data is coming from, shedding light on how data is validated and how it's being distributed across chains. And shedding light, meaning accessibility, being able to see and access these oracles across any chain. For me, that's what Lumina represents. I hope I don't get backlash here from our marketing team in case they had anything else in mind. But no, that's really what it means to me. Yeah.
No, I love that. Super useful and really meaningful. I like it. I always ask questions about the names because normally there is a story behind it. And it's such a beautiful story behind Lumina just shedding light. But yeah, let's move to feeders, or I don't know what's the logical starting point of delving into the 3 different components of those.
Absolutely. So let's start with feeders. Feeders, and I understand there might be, as we're introducing this architecture, a little bit of confusion with just like these terms that I'm using. So as I've mentioned, Lumina is just the entire stack, the entire architecture itself. LaserNet itself is referring to the rollup itself. And then feeders we're getting one layer deeper. Feeders refer to the validator nodes on the chain. So what the feeders are doing, or rather the validator nodes, are fetching the most recent price data. They're running Docker images to get more technical, but they're basically running feeders, which are ingesting or taking in all of the recent real-time trade data from all of the sources that DIA is sourcing. So these validators are independently sourcing all of this data and delivering it onto DIA LaserNet, onto the chain. So that's the feeders. They're basically sourcing and validating data, pushing it onto the DIA chain. We then go into pods. I want to make sure I'm going down the right order here, but basically pods, which are storing this price data on chain. So whereas the validators and the feeders are pushing this, they're feeding all this on chain. The pods are taking this data and storing it, right? Because the feeders themselves are not actually storing this data, they're just delivering it on chain. The pods are then storing this most recent price data, and then we have a smart contract which is medianizing this to find the average price point. It's excluding outliers and finding basically the median price point of the data which has been pushed on chain. So that's the feeders and the pods, and then we get into Spectra, which, as you referenced, is this interop layer where this is also, a modular component, where, as I mentioned, cross-chain messaging protocols, you refer to it as a bridge. I think that's very much kind of, I think that's very accurate, right? So this is essentially a bridge. Some people deeper in the bridging space might suggest that a bridge is one which is actually sending assets across chains and has actual value being transferred across chains, whereas a message passing protocol is one which is just sending messages without an actual value assigned to an asset that's being sent over. So for us, I guess those 2 words can be used to kind of interoperably. So the interop layer, Spectra, is what we'll be using to leverage different cross-chain messaging protocols and to send the messages across all the different destination chains. So I don't think we've gotten too deep into this yet as we've announced the vision. And I'll definitely, we're actually doing some technical deep dives into each of these components over the coming weeks. So we'll definitely be sharing a lot more light, a lot more Lumina on all.
Love that. Love the reference.
On on all of these different components that are to come, and how and just exactly which cross-chain messaging protocol we'll be leveraging with Lumina, with the launch of Lumina, and how it's going to all play a role collectively. So yes.
And just to finalize this part of the conversation about Lumina, could you explain how Lumina fits within the entire DIA ecosystem? Because now we understood what that is, but how does it, essentially fit within the entire stack?
Totally. So Lumina is the stack. Lumina is the stack that we'll be providing oracles and supporting all of our teams with going forward. This is the stack on which real-world assets are going to be sourced, validated, and distributed, where token price feeds are going to be sourced, validated, and distributed, where all of the flow of data is going to be performed on LaserNet, on the layer 2, and then within the scope of Lumina, done through Lumina, right? Sourced, validated, and then distributed. And so you first asked, what's really the difference? Why did we really, add Lumina? How does it align with our values? And so maybe I can come back to this now that I've explained a little bit more in depth, which is we started with transparency. So within Lumina, this is a layer 2 rollup where now, as I just mentioned, all of the flow of data from sourcing to validation to distribution is done on chain. And so this is going to be entirely transparent. And aligned with furthering this vision for superior transparency. And as we continue to advance with implementing CK proofs, this will provide even further transparency about off-chain data sourcing as well, and trustlessness about off-chain data sourcing. And then accessibility, this interop layer, leveraging different cross-chain messaging protocols, or working with them and leveraging this interop layer is going to allow us to expand the scope and the amount of chains that we can deploy on, and be integrated on permissionlessly. So this is really going to allow us to really deploy and support a lot more chains, and create more accessibility for DEA oracles using Lumina. And the last thing is really, as you already referenced, like just this future proofing, right? So we're able to implement ZK proofs. We're able to adapt modularly now to the changing demands and needs of oracles within the industry. And so Lumina is really our launch to support where we think things are and where they're heading, and to further our initial visions of transparency and accessibility.
And I want to move on to the token and the tokenomics, and what's the role of the token within the ecosystem. So could you just tell me a bit more about the token? And I know that you have a governance function, but I'm actually not sure whether it'll also be used when you utilize the oracles. So if you can just run me through the utility behind the token.
Yeah, again, I'd like to share my screen here because I'm pulling it up on my end because this is the best way to showcase it. But what I'll just hop through it at a high level. So the DEA token is really going to be integral in the data validation process on LaserNet on the layer 2. So it is kind of, we've implemented the DEA token itself to be this accessibility model, or rather to be the incentive model for accessing DEA oracles, for providing cryptoeconomic security for staking, and then to incentivize validators on the chain. So that's the three different things, and I'll dive through each individually. So users will use the DEA token in some instances to access DEA oracles. So in some instances, there will be the requirement or the usage of DEA tokens in accessing DEA oracles. This then gets pushed into the feeders. So the tokens which they are then submitting to use and access the oracles gets pushed into the feeders. So it's rewarded at feeders, again being the validator node. So it's used as the incentive and payment structure for validator nodes to accurately perform their duties in pushing data on chain, and be incentivized with the token and get rewards through that. And then furthermore, as I mentioned, stakers now will have additional utility for the DEA token amongst our community and amongst DEA holders who want to stake to contribute to adding economic security to DEA LaserNet. And so there's kind of this flywheel here where users are paying for Oracle data in some instances, which is being rewarded to feeders, which are validating this data, and then stakers are staking their DEA tokens to gain economic security, and be rewarded as well through native yield.
And it's interesting because you said just in some instances, users will use the DEA token. Could you elaborate on this? Why just in some instances? Why not all the time? and like what other token can they use? Can they use USDT or USDC?
Exactly.
Um,
Exactly. So we've actually seen across the industry, sometimes oracles do require you to use their native token to access the oracle. And I believe, and we believe that this can introduce difficulties, hurdles, fragmentation, right? You're not going to necessarily be able to pay for DIA token on pay with DIA tokens on some chain that you just integrated permissionlessly. So there will be, access to DIA oracles using USDC. And I don't want to speak too far in advance because we're still launching testnet. And so these are still kind of some areas that we're speccing on and understanding better which tokens obviously would be best to access. Again, it all comes down to access, right? If you're just limiting this to DIA token, then it's limiting access. So to access the oracles, which tokens would be best? And also, this is still a little subjective because let's say, for example, there already is an oracle live on the chain that, for example, a blockchain foundation is supporting. We work with a lot of blockchain foundations to offset the costs of DIA oracles on their chain so that any developer on that chain can access DIA oracles free of charge. This is oftentimes a lot of the relationships that we have is actually, as I mentioned, offering customizable oracles at no charge to dApps on chains, and in working with the foundation itself to offset these infrastructure and maintenance costs. So in the instance in which a team comes and requests an oracle that is not being offset or needs very customizable tokens or customizable methodology that, for example, the data feeders, right, on the DIA chain would now need to integrate up, undergo an update to integrate and access a new pool to provide a new price feed, then there would be a requirement to add the DIA token or the USDC or some sort of payment to add this new pool or add this new asset to be supported through DIA oracles. So I know that's it's rather complex still. Would this is still kind of obviously early stages in terms of the go-to-market, and so this will all be further clarified, of course. And I don't want to speak on any of these like they're absolutely concrete just yet because this is the vision. But we are absolutely always flexible to our partners' feedback, and as I mentioned, like the best way that we can do to make these oracles accessible and easily accessible, integratable, and useful for all teams. So that's the utmost importance.
and you also mentioned the stakers, which would then have a governance function. And my assumption is that you want to have a DAO and be fully decentralized. And I've always been a big proponent of decentralization, but Oracle services are one of those complex topics that you need very specialized knowledge and experience within that ecosystem to be able to make the right decisions, like choosing data sources or selecting node operators or data providers, and just in general, maintaining the overall system and making sure that it works frictionlessly is like so important. So are you guys thinking about it? Because I realized a lot of projects have been pushing this like DAO idea and like decentralization, and I like that a lot. But I'm also thinking whether it's like complex businesses should be run by comparatively decentralized community. There's like a philosophical debate to have there. So I'd love to hear your opinion on it.
It is a great question. And I think that it's a question probably everybody has, right? I don't think there's a concrete answer to this in terms of like a really great example of such a type of use case that you mentioned really does require like robust monitoring, robust like thought processes into decision making that was able to do this through a DAO. I think Uniswap is one of the best examples of probably a DAO type of structure that's achieve success in that regard. But what I can say is we've always been proponents of the DAO approach. Since inception, DIA has been formulated as a DAO. And we currently have a large community of contributors who on a bounty basis contribute to the DIA DAO. And so it definitely aligns with our long-term vision to further decentralize the processes and, you know, the decision making. But like I said, it's still a little bit early for us to align, exactly pinpoint, you know, how this can be done. And what we're doing in the meantime to get there, what needs to be done before we can make this decision of where the DAO comes in next is, like I suggested, we need to get to the point where we can automate these processes, where we can automate the monitoring of, or rather the decision making behind which pools are included and which are excluded. And we already have internal processes for this, but this needs to be done on a permissionless level, so that, again, we need to get to the point where anybody can integrate DIA oracles onto their chain. Anybody can deploy DIA oracles onto that chain then. And then we need to have this very robust automation system where, you know, pools are included or excluded. We need to really go through this whole decision making to make the product permissionless before we can get to the point of the role that the DAO will come in to make these larger directional decisions. But what I can say is that, you know, we're not going to be around forever. And a lot of the teams that we work with are like, hey, we want to build a protocol that's immutable, that can be around forever without any change. How can I ensure that DIA oracles are always going to be around? And as an oracle critical, you know, component to many of the teams that we're serving, this is super important. How are we ultimately going to scale and achieve continued growth and evolution without it, as over time, let's even think like bigger, like hundreds of years. like you know, a lot of the space moves so fast that we're focused on what happened today, yesterday, and tomorrow, and in a year or two. But even looking forward, like decades, it's definitely a long-term vision for us to continue to focus on the DAO alignment. And I think that as the space evolves, we'll continue to have more strong examples of how we can implement this as well on our end. But yeah, I don't have a very concrete direction for that just yet, but it's definitely super interesting for us and something that we will not give up on or dismiss.
No, absolutely agree with you. Thank you so much for that. Such a pleasure talking to you, discussing the DAO, the token, Lumina, and everything that you guys are doing. It's I'm looking forward to the launch and having you back on the podcast.
Thank you. Absolutely. Next time we do it in person again, hopefully you don't beat me up with your MMA and your Kimuras there. But no, it absolute pleasure. Thank you so much for having me on again. Really great to catch up with you.